Welcome student. Today we going to discuss one more question from your set chapter number 2 piecemeal distribution of cash. That is there are the three partners in this question, Anita, Sunita and Nita, where partners sharing profit and losses in the ratio 1/2, 1/4, 1/4 respectively. The following was their balance sheet as on 31st 12 2018, on which date they decided to dissolve their firm. Balance sheet as on 31st 12 2018. There are the liabilities and there are the assets. There is a particular format of assets and liability given to you. According to this, creditors, income tax, loan from bank, and particularly some pledge given for the loan from bank. So you can say it is a secured loan. Loan from bank has security related with the stock. Then Sunita's loan and Nita's loan, that is the partners loan account, are appear in this question, as well as there are the three partners and their capitals present in this question. So with the some assets, that is the cash, stock, debtors, furniture and motor car present in your question now. Now we discuss some adjustment related with it. So there are some adjustment, that is the first, bank would release only 50,000 on disposable of stock. As you are aware, there is with my cursor loan from bank, and under this specific note are present, that is the secured by pledge of stock. In this section you can say it is whatever the loan from bank are there, it is amount given as a 60,000 as a loan, but in this case the whatever the security given, that is the pledge given as whatever the assets are there, that asset release rupees 50,000 only. So first of that, loan from bank will be released, that is 60,000 minus 50,000, that is this is your first adjustment, 50,000 disposable stock. So whatever the remaining 10,000 is there with the related with the loan from bank and stock of pledge of stock, it whatever the remaining amount after the reduction of 60,000 minus 50,000, that will be considered unsecured liability and recorded after the creditors. So when we start the giving order of payments, at that time we record the heading of bank loan again for the 10,000 rupees. Then record the Sunita's loan and Nita's loan. These are the liabilities. After that, sum of rupees 6,000 was spent on repair of a razor to get better price. So this is the amount which we have to kept aside for the expenses. Then we discuss about the realization of assets, which is mentioned in your question. We as per gradual realization or the piecemeal distribution rule, here there are some asset which is released after each month. It is not mentioned on which date, but they explains you each month. In Jan 19 to whatever the 2019, 24,000, February 19, 30,000, March 19, 20,000, April 19, 60,000, and May 19, it is 1 lakh. So according to that, you have to prepare statement showing distribution of cash as per proportionate capital method. Proportionate capital method means surplus capital method. For the calculating and finding out some basic headings, this is the first procedure, that is a calculate statement showing distribution of cash as well as the statement showing surplus capital. So the first statement we are preparing here, that is a statement showing surplus capital. Under this heading, we start with a particular statement. There is no ledger format or no calculation of accounts. We just go through the preparation of surplus or the statement format. So particular and the three partners are recorded here. With your surplus statement, start with the balance of capital. So balance is as per balance sheet. So in short form, I am writing B oblique, that is your balance sheet. The capital balance given in balance sheet according to the name of partners, 80,000 for Sunita also, and 60,000 for Nita. So while writing or after writing capital, you should check whether in your liability side or whether in your balance sheet is there any profit, is there any reserve are mentioned. If the profit and loss account on liability side and reserve or any reserve and surplus present in your liability side, it should be added to your balances as per balance sheet or the balances of capital and make them actual capital. Now there is no reserve fund as well as profit and loss account present, so it is not recorded. Make sure whenever you distribute reserves as well as profit and loss account, it should be reserve in it should be divided in profit sharing ratio. But today they are not present in our question. So we continue with the calculation of surplus capital of any one partner among the three partners. So procedure for it, write down the profit sharing ratio. This is the first step. Profit sharing ratio, from this onward we are going to call it PSR, that is your profit sharing ratio. So profit sharing ratio gives you in this line, they explains you one half, whatever be the one half, 1/4 and 1/4. Whenever you calculate your profit sharing ratio, one half of, you can calculate one half into total denominator of big denominator, that is one half into 4, that is the 2, 1, 1. So one half of 4, that is 2. 1/4 of 4 is 1 and 1/4 of 4 is 1. So 2, 1, 1 is their profit sharing ratio. Now find out the unit value. Find out the unit value. Unit value will be find out with the formula actual or the capital as per balance sheet or the capital given. In this question, we just continue with the capital. Capital divided by PSR, that is your profit sharing ratio. Profit sharing ratio. So you will get 1 unit of each capital, each partner's capital. That is 80,000 divided by 2. You will get the one part of capital of A or Anita. Then 80,000 divided by 1, it is the same amount, that is 80,000. And 60,000 divided by 1, it is 60,000. Whenever you divide by 1, it is the same amount remain as a reminder. So this is your calculation after the unit value. When we get or find out the unit value, start the next process, next step, that is the less proportionate capital. What is your proportionate capital? You should consider the smallest or the lowest unit value of any one partners. The partner who have smallest or the lowest unit value. So less proportionate capital. Consider the smallest unit value. You can say consider base of A. Is or Anita's capital. So base, you can consider base of Anita's capital. So capital 40,000 into Anita's ratio. 40,000 into 2, that will be 80,000 for Anita. Again start with the 40,000 into Sunita's capital. It is 40,000. Then 40,000, that is the base capital, into Nita's capital, Nita's profit sharing ratio 1, that is 40,000. When you consider this amount, make sure you should continue with the smallest value of unit value of partner. According to that, you will get the surplus capital at this stage. What is the surplus capital? Make sure 80,000 minus less proportionate capital, you will get whatever the amount. For A or Anita, it is nil. For Sunita, 80,000 minus 40,000, it will gives you 40,000 remaining surplus capital. Then 60,000 minus 40,000, for Nita, it is 20,000. So again, if there are more than one person, one partner, you can continue or you should continue or calculate the same procedure from the above section, that is the profit sharing ratio. Put your profit sharing ratio for remaining partner, that is 1:1, because there are two partners, Sunita and Nita. Then start again calculating unit values. Formula will be same. Capital divided by PSR. 40,000 divided by 1, 40,000. Sorry, 40,000. And 20,000 divided by 1, it's again 20,000 for Nita. Now continue with the proportionate capital. In this stage, we will discuss what is the what is the base for proportionate capital. Again, the rule for same, that is the lowest or the smallest or the lower unit value of any partner, So you can consider the partner with lowest unit value, that is the NITA. So right here NITA capital as a base capital. So 20,000 is Nita's capital. 20,000 into Sunita's ratio, that is 20,000 into 1, again 20,000, and 20,000 into 1, that is the Nita's own profit sharing ratio, 20,000 into 1, 20,000. So after this, getting this proportionate capital, minus it from your actual or the surplus line capital, surplus 40,000 minus 20,000, you will find your absolute surplus capital of any one partner. And Nita 20,000 minus 20,000, it will give you nil amount, that is the 0. So according to this, you will find your one absolute surplus capital, that is Anita. It means Anita will get the first priority to receive capital amount, that is rupees 20,000. Then we move towards and calculate the profit, then find out the order of payment. What is your order of payment? In this heading, order of payment, first you have to pay income tax. It is your government liability, income tax. So it means it is the first column of your after the cash, income tax. Then we move towards the creditors. This is the second column. Then we continue with the bank loan again. Bank loan, but make sure we are not recording 60,000, but recording 60,000 minus whatever be the pledge or the stock release, only 10,000 will be recorded. You can say it is unsecured liability. Bank loan 10,000 will be unsecured liability because there is a security in which is disposable rupee for rupees 50,000. So 60,000 total amount of loan less 50,000, you will get remaining amount considered as a unsecured liability, and it will be recorded after the bank, after the creditors. Then next order of payment will be partners loan account. Next, partners loan account. There are the two partners and they have a loan account. So there are two partners and their loan account, and then we have to pay capital. And first priority given to Anita, rupees 20,000. So these are the order of payment we have to follow and record all the partners capital accounts with the other liabilities. So these are the order of payments. It will be discussed then.